Good afternoon, everyone. David Blain here, CEO of BlueSky Wealth Advisors. I thought I'd take a break for a few moments from our 2021 economic outlook to address some trading in GameStop. So this morning, I have a couple kids in college. My oldest, who's a sophomore at North Carolina State University, Wolfpack there in Raleigh, he asked me a question. He said, "Dad, can you get in trouble? Can you go to jail for like promoting a stock online and then buying it?" And so I knew when I heard that question that there was something going on. So anyway, as you may or may not have heard, there's some trading going on. Companies like GameStop, AMC theaters, things like that. Some pretty wild movements. And while we typically don't get involved in trading of individual securities, obviously, certainly not on a daily basis, it is headlines in the Wall Street Journal. So I thought I'd give you our take on that. So first of all, just to recall here at BlueSky and my philosophy in investment, to kind of paraphrase from Benjamin Graham and Warren Buffett, is an endeavor where the return of your principal is somewhat assured and that there's a high likelihood of you making an actual return on your money. And so we divide things into investing and speculating. And when you're investing in a stock or the stock market for a long-term investor, you look at things like valuations. GameStop, which I have the chart right here in front of me, January 22nd was trading at $44 a share, but is actually losing money. Over the last year, it lost $4.25 per share. So it's losing money. And then all of a sudden, the stock price went crazy. Last night, overnight, yesterday it closed at it opened at $468 a share. Like, I can't even keep up with it. The thing is going all over the place. But at some point overnight, it was over $500 a share. And then this morning, it opened at $468 a share. Currently, as I speak here, about 3 o'clock in the afternoon, it's about $251 or down 27% on the day. It's just all over the place, and it has nothing to do with the fundamentals of GameStop or whether it's a good investment or not. It's all psychology. And that's what's been happening is with apps like Robinhood, where you can trade on your phone for free, and websites like Reddit, people are promoting these stocks and bidding the prices up. Now, on the other side, I certainly don't have any feelings for the Wall Street traders that lost money because they were all shorting the stock. And what does that mean? Is they're selling a stock that they don't own, essentially hoping the price goes down and they make money. And so a lot of them were complaining and these individual traders and Robinhood were losing money. Frankly, I don't really care if they lose money. They know that when they're shorting stocks. And people that short stocks actually provide a valuable service to the market. They help with that price discovery. They keep things in line. But in this particular case, they lost, and that's fine. That's the risk of being a trader on Wall Street. But these individuals that are trading, they're not investing. Okay, this is speculating for sure, and it's not something that we really espouse. I have a saying here that investing is something you do to grow your savings. If you're looking to make money, that's what you go to work every day and do. You make money at a job, you make money at a business. And so maybe your business is trading and you say, look, I make money, and I'm not disputing that there are people that are making money in these stocks. Certainly if you bought it at $45 a share and sold it this morning for $400, that's a tenfold return. And I realize there are people doing this, but I guess you may notice I get in a little bit of gray hair on the sides of my head. I've been doing this for a long time, and I've seen this movie before. For those of you who've ever seen the Wolf of Wall Street, the movie, you know that it used to take place in stock rooms, the pump and dump. And these stockbrokers would call, they'd create a lot of excitement for stocks, and then they'd sell it at the peak. They'd pump it and dump it. We also saw this back, when the internet was first booming in the late 90s. We saw people introduced to day trading at the time. And back in I guess it was the 70s, when Charles Schwab started Schwab, it was the first discount brokerage, and you didn't need to pay $500 to buy and sell a stock. And so we've seen this over time. We've seen different ways of trading stocks come into fad, and we've seen people lose a lot of money. And yes, you're going to read stories of some, college student that made a lot of money on GameStop or AMC theaters. You're also going to probably not hear a lot of stories about the young college student or the person that quit their job to day trade that lost all their money, but that's actually more common. But I did want to address it. It is in the news, and why it's happening. And obviously, for us, it's nothing that we're going to get involved with, certainly. It's not what I would consider a long-term investment strategy that is profitable over a long time. We prefer to invest in endeavors that have a reasonable likelihood of making a decent return. But anytime you see something go from 40 to 500 and today back down to $250 is a good sign that you should stay away. So if you have any questions on that, by all means, let us know. But, even though we are long-term investors, we're not oblivious to what's going on in the world. And we do look at this stuff and we do understand what's going on. So if you have any questions about it or want to know if you should do it, and the answer is probably no, but feel free to reach out to us, and we'd love to give you our view on these type of things. So we'll resume here next Tuesday. We'll post another economic outlook, but in the interim, I just wanted to talk a little bit about GameStop and some of the other trading activity that's going on.